Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. In today's video, I'll share my analysis of the historical trends of the aerospace and defense sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. The aerospace and defense sector in the Indian stock market has experienced notable growth and transformation driven by government initiatives and increased investor interest. The companies are involved in R&D, manufacturing, and maintenance of aircrafts and helicopters, radar, communication, and electronic warfare systems, missiles and related defense equipment, specialty materials for aerospace, naval ship and submarine building, etc. The key growth drivers include government push for Atmanirbhar Bharat, rising defense budget, geopolitical tensions, export opportunities, growing civil aviation market, and space race. The government supports this sector with policies like defense acquisition procedure, FDI relaxation, Make in India and innovations of defense excellence, positive indigenization list, and defense corridor setup. The major challenges for the sector includes high entry barriers, regulatory delays, lack of R&D funding, skilled manpower shortage, global competition, and over dependence on PSUs. So now in order to identify the historical trends in this sector, I will present two graphs. They are the end result of my analysis of the share price movements of last 10 years of top 10 companies of this sector. The top 10 companies of the sector comprises of 7 large cap and 3 mid cap companies. The first graph will show the yearly returns, whereas the second graph will show the monthly returns. So let's start with the first graph. So this is the graph for the yearly returns. The green bars in this graph shows the positive yearly returns, whereas the red bar shows the negative yearly returns. The orange line down here shows the cumulative returns. The green line here shows the number of months with positive returns. The red line shows the number of months with negative returns. Let's start with 2015. So 2015 was a very good year for this sector. The sector managed to give a very good returns of 57.11% with 9 positive months and 3 negative months. 2016 was not a good year for the sector, and the sector gave, in fact, losses and gave negative returns of almost 5%, minus 4.97%, with 6 positive months and 6 negative months. But this sector skyrocketed in 2017, and this sector gave returns of 116.75% in 2017, with 9 positive months and 3 negative months. But then the sector doomed in 2018, and it gave negative returns of minus 36.56% in 2018, with 8 negative months and only 4 positive months. 2019 was an average year for this sector with returns of 10.48% with 7 negative months and 5 positive months. The situation started to improve, and in 2020, the sector managed to give almost 24%, 23.98% returns with 7 positive months and 5 negative months. Situation improved further in 2021. The sector managed to give almost 50% returns, 49.97%, with 7 positive months again and 5 negative months. Situation improved even further in 2022 with returns of 67.80% with 8 positive months and 4 negative months. 2023 proved to be the best year for the sector over the last 10 years with returns of 146.43% with 10 positive months and only 2 negative months. 2024 was again a very strong year for this sector, and the sector managed to give returns of 84.25% with 8 positive months and 4 negative months. To see the cumulative returns, let's follow this orange line, and over here, over the last 10 years, this sector has managed to give cumulative returns of 3,113.05%, which is 2032x. So extremely good cumulative returns. Let's see the key takeaways. So first is the cumulative return. We have just seen that uh, 3,113.05% over the last 10 years with 32x CAGR 41.48%, extremely good CAGR, very very good CAGR of 41.48%. Net negative yearly return 2, that means 2 years with negative yearly returns, 2016 and 2019. Not that bad of a number as well. Best year was 2023, no doubt about it. The sector managed to give returns of 146.43% in that year. Worst year was 2018. Again, no doubt about this as well. The sector managed to give negative returns of 36.56% in that year. Positive to negative year ratio is 4 is to 1, a respectable figure, which means that 4 positive years against every one negative year. And we can see that in the last 10 years, two negative years, and there were 8 positive years. Let's see the monthly returns graph now. This is the monthly returns graph. The green bars here shows the positive mean monthly returns. The red bars shows the negative mean monthly returns. The green line shows the number of years with positive returns, and the red line shows the number of years with negative returns. So let's start with January. January seems to be a flattish return month for this sector with almost negligible returns of 0.78% average over the last 10 years, with 6 positive years and 4 negative years. February is by far the worst month for this sector, with average returns of negative 4.20% and with 8 negative years and only 2 positive years in the last 10 years. March seems to be an average month with 1.33% average returns, with 6 positive years and 4 negative years. The situation improved considerably in April with average returns of 5.84%, 6 positive years and 4 negative years. May again seems to be a just above average month with 2.93% average returns, but 5 positive and 5 negative years. June and July seems to be very good month for this sector with the average returns of 7.72% and 7.99%, with 8 and 9 positive years respectively and 2 and 1 negative years. So very good months for this sector, June and July. August, an average month for this sector with 6 negative years and 4 positive years. September again, average month with 1.53% average returns and 6 positive years and 4 negative years. October, an above average month with 4.63% average returns and 6 positive years and 4 negative years. November, a good month with 5.18% average returns and 8 positive years and only 2 negative years. December too seems to be a good month for this sector, and the sector has averaged 5.71% returns in this month over the last 10 years, with 7 positive years and 3 negative years. So, all in all, February is the only month which has average returns in negative over the last 10 years, and there are several months we can see which have good average returns. Let's see the takeaways. The cheaper months, January, February, and August. So January with almost flattish returns of 0.78%. February clearly the only month with average negative returns of minus 4.20, and August with less than average returns of 1.12%, but more importantly 6 negative years in the last 10 years. The costlier months, so April, June, July, November, and December. April, June, July, November, and December. So, as I mentioned, several months have uh, good average returns. April with 5.84%, June with 7.72, July with almost 8%, November 5.18, and December 5.71% returns over the last 10 years. July clearly the best with almost 8% returns and 9 positive years in the last 10 years. Finally, let's see the positive to negative month ratio. This is 1.55 is to 1. Again, not a bad number at all. So 1.55 positive months against every one negative month over the last 10 years. It is over the last 120 months. So all in all, very good sector, I would say. Nothing, nothing negative, nothing extraordinary negative for the sector overall. So that is all from my side in this video. Thanks for watching it. Please subscribe to the channel, like and comment, share it with your family and friends. I'll be back soon with another video. Goodbye for now.